We're going to move on to video game makers, where takeover fever has hit the sector this week, setting off a speculative frenzy of buying. It's caused huge spikes and huge pullbacks in shares of Electronic Arts, Take-Two, and THQ. Our Greg Miles is here to talk about whether the deals are a real possibility or perhaps just a game. So, Greg, why are investors focusing so intently on video games in particular in this takeover talk?
Yeah, Scarlett, you know, if you're overloaded with news from the G20, the United Nations, the Clinton Global Initiative, I mean, video games are for you. I'll tell you, investors are worried that competition from the internet is just strangling the growth of the big media companies. We're talking about the Time Warners, the News Corps, the Disneys, the Viacoms. Now, I spoke with Doug Kreutz, an analyst at Cowen and Company in San Francisco, about this pressure. Let's listen.
If you look at the traditional media companies, they're in several businesses like broadcast television and radio and newspapers, where the secular trends are not positive, whereas the secular trends in video gaming are positive. And to stay relevant, I think there's some notion that they want to get into the video game business.
And the fundamentals are attractive.
Yeah, what did he and other analysts say about the fundamentals specifically?
Yeah, it's pretty striking. The video game industry sales growth has been spectacular in the past decade. When you look at total video game hardware, software, accessories, it tripled to $21 billion in the past decade. Software, which is what we're talking about here, and again, nearly tripled to $11 billion. That means that software sales alone in video games are larger than movie ticket sales across the United States, which were almost $10 billion last year, bigger than the movie industry. Hard to believe.
Now, what about people who are actually buying these shares of video game makers on the hopes of a takeover? They could always get burned, right? Yeah,
there's a fair amount of skepticism about whether these companies are going to be taken over or whether they are a good fit. Again, Kreutz in San Francisco was one of the skeptics. He points out that game software makers report non-GAAP earnings, but actually on a GAAP basis, they're bleeding heavily. He points out that Electronic Arts, for example, he says is a dangerous acquisition. It's massively dilutive. It will cost you $7 to $9 billion. THQ has valuation risk. Also, Take-Two, he points out, is controversial. It's got Grand Theft Auto. You're talking about the risk of the CEO of the buyer being pulled before a congressional committee and being criticized for polluting young minds. That's been done before with these video games. You can be on the hot seat.
Well, then very quickly, what are the odds of takeovers then?
Well, a lot of these players have lots of cash, including, by the way, Google and Microsoft, Time Warner and others. When you got a lot of cash, they tend to spend it on more of the dividends and buybacks. Acquisitions are a lot more fun.
Right. Well, but investors always like their dividends as well. Thank you so much, Greg Miles, on video game makers.